Well, stepping into a brand new year, the only thing that comes to your mind would be resolutions. Well, the most commonly used resolution of all is losing weight and getting into shape. Some manage to fulfill their targets, and some would even lift their benchmark a bit higher and say, okay, let me build muscle now. But yes, it's that time of the year where we review the economy of the country and see how well Sri Lanka has fared in the year 2016, as the government really managed to flex its muscle in the economic battle. Well, joining me today on Biz1st in Focus is Mr. Anushka Vijay-Singha, the Chief Economist of the Ceylon Chamber of Commerce. Very good evening to you, and thank you for joining us.
Good evening, Stephanie. Good to be here.
Well, just as I mentioned earlier, how well has the government fared this year?
So it's been a tricky year, as we saw, with particularly starting with the budget of 2016. A lot of proposals that were announced in November last year didn't get implemented this year. There was a lot of back and forth on matters like the VAT. A lot of the new initiatives also didn't get off the ground. So in that sense, it's been tricky. What has been positive, though, has been the fact that there's a new narrative going out to the world, that Sri Lanka is now slowly becoming more open for business. We're trying to reset our foreign policy, which of course has an impact on inviting foreign investment. So there's a positive narrative now taking shape, and that's, I think, something that the government has been able to kind of put out there. But overall, to come back to your question, it's been a difficult year for government policy. A lot of flip-flopping, a lot of policy uncertainty, which hurts business. A lot of businesses had to deal with tax uncertainty and so on. So let's hope that 2017 resets some of that.
Well, speaking about setbacks, the balance of payment crisis has been something that has come under a lot of fire on different platforms throughout the year. And also the monetary policy that governs the Central Bank of Sri Lanka and helps it function has also come under a lot of fire. But what does the future hold for us in that scenario, and how do you think we can tackle this and learn a lesson for next year?
So you're absolutely right. I think both those fronts, both on trade and on monetary policy, it's been tricky. On trade, particularly balance of payments, I wouldn't say we're in a crisis yet, but I think there are a lot of alarm bells being sounded. It's not new for Sri Lanka, though. So that's what's kind of puts us into complacency a little bit, but is also worrying, because we keep having these bouts of BOP crisis, and then we tinker a little with trying to reduce vehicle imports, and then we try to increase interest rates to reduce imports, and then we try to adjust the currency artificially. So we keep doing these little tinkering in the hope that we can find a fix for our balance of payments.
So do you think that we need a change of strategy altogether?
I think the biggest change of strategy will be to stop focusing so much, as we always do, on the imports and curbing imports and on that side of the equation, to the other side of the equation, which is exports. Because we can't have a sustainable fix to the balance of payments issue without fixing that side. We need to be earning more export revenue and not just relying on worker remittances, which often is a big buffer for our imports. And whenever exports fall, we are happy because at least worker remittances are buoyant. So focusing on that side of the equation really should be the fix. And whether it's expanding into new markets, whether it's improving competitiveness to boost exports, not tinkering with the exchange rate artificially so that it can be competitive for exporters, a whole host of things which can really help that side of the equation on the balance of payments.
Well, Mr. Vijay-Singha, speaking about trade, the government has been striking many bilateral agreements, and what does the future really hold for us in terms of trade and agreements?
So first on trade more broadly, Sri Lanka hasn't been punching to its full weight on international trade. About a decade or more ago, we used to be a nation that had a trade to GDP ratio of about 80 80%, which meant we were trading more with the world. More of our growth and more of our economy was reliant on trade. But more recently, it has fallen scarily to 50%. And that is, compared to countries like Vietnam, Thailand, Malaysia, Indonesia, and others that are trading at 100%, 120, 150, 200%, which means more of their economy is being driven by trade. Now, for a small economy like Sri Lanka's, we can't afford to have a trade to GDP ratio of 50%. We have to be trading more. So that, I think, has to certainly see a shift. One part of that, yes, is the bilateral trade deals, preferential trade agreements, or PTAs. That sort of helps us get our products more market access into these new markets, or expand market access into existing markets, whether it's India or China or Singapore, Pakistan, Turkey, all of these new places where all these new agreements. But that won't fix everything. Those agreements are only as good as our exports. So if we don't have the competitive products to export, even if you have a trade agreement, you're not going to make use of it. If you have a trade agreement, but there are all these little nagging barriers, which we call non-tariff barriers, that's also hurtful of exports. So we should, yes, welcome preferential trade agreements, but it's certainly not the end-all and be-all. There's a lot to do to help us gain from those agreements.
Well, the government made a rebid to regain its GSP Plus, and now it's positive that we will get it next year. So what do you think is going to happen after that? What does the future hold for us?
So again, I mean, reiterating the competitiveness of exports. So the GSP Plus, I think, will give us a good, almost a much needed bit of relief, because the European markets aren't doing great. A lot of our exports were hit when we lost GSP Plus. So temporary relief. But beyond that, it's not things like GSP Plus that can give us long-term relief. It has to come down to competitiveness. Are we producing the right things that Europeans want to buy? Are we producing it at the right quality, at the right price? Are we going to the right markets in Europe? Can we diversify into other parts of Europe? So that's a big part of the agenda, I think, moving forward. But we have to remember that Europe isn't doing great. There's still residual impacts of the crisis there, where incomes aren't growing as fast. There's high youth unemployment rate in these European economies. The European Central Bank is continuing with the stimulus, which shows the economy is still weak. So we can bet on Europe still growing to some extent, but ultimately it'll depend on what do we do to make our exports competitive in Europe and elsewhere.
Well, the Brexit happened in the UK, and that had a huge impact on our export market when it comes to tea. We export most of our tea to Europe and the UK. And how do you think is this going to play out in the future if they trigger it?
So I think Brexit was interesting, because initially we thought it'll have a bigger impact than it actually did. So about 10% of our exports go to Britain, and out of that most of it is apparels. But apparel exports to the UK have been kind of dipping for a while. So I'm yet to see what will happen post-Brexit particularly on our apparel exports. I think it'll come down to the companies that have good buyer relationships in the UK, regardless of Brexit, regardless of GSP Plus, will do better. The ones that have, that are producing the right things for the top brands there, who have good supply chain linkages.
Have we created that sort of
So some
confidence?
companies have. Some companies certainly are catering to those brands, and they are as those brands and retailers are shifting their focus, so have our guys, and they've been very nimble. Some of the others haven't, and they are the ones who are probably going to struggle. But you mentioned tea. Tea is a big reason why exports were tricky this year, because oil prices were low, and our biggest tea export markets of the Gulf countries, Arabic countries, Russians in Russia and the CIS countries, they were really hit because of the oil prices, plus sanctions in Russia. So we're hoping that 2017 there will be some recovery of tea, with oil prices edging up a little bit, with Trump, sanctions on Russia and, the friction there easing up possibly. So I think I'm a little more positive on tea in 2017 than I am in 2016. And on tea, it's a good reason to be positive next year. It's 150 years of Ceylon tea. So a lot of celebrations happening around that.
Well, you're watching Biz1st in Focus. We are having a quick review of 2016. When we come back, we'll have a comprehensive discussion about trade, the market, and the domestic market. So stay tuned. Welcome back. You are watching Biz1st in Focus, and I'm in conversation with the Chief Economist of the Ceylon Chamber of Commerce, Anushka Vijay-Singha. Well, Anushka, before we went in for the break, we spoke about trade, we spoke about the monetary policies that govern the Central Bank of Sri Lanka. But now I think we need to talk about the float in the rupee and the attempt to do so in September. The rate that we are going right now, how much of a fix is it? How much of a good strategy is it? Do you think that we should really go into a different strategy altogether?
So the strategy that the central bank seems to be following now is to allow more flexibility with the exchange rate. And we've seen that happen over the last few months, and especially actually yesterday and day before yesterday, the central bank further allowed the rupee to slide. It was closer to 150, 151, 152 and so on. So, and they released a statement saying that they would be moving more towards allowing market-determined rates. Now, I think this is inevitable. We just don't have the foreign reserve space for the central bank to keep artificially defending the rupee to a huge extent, just expending our dollar reserves. So this is inevitable. But I think, of course, there will be political considerations for the government, because with a slide in the rupee comes imports, a higher import bill. It's probably, we have a little of breathing space right now because oil prices are still around the $50 per barrel mark, and if that changes next year, along with the further slide of the rupee and imports becoming expensive, I think then we have some concern. But again, I come back to the exports. With the slide in the rupee, our exports get a bit of a boost on the price side, and I think this is the time for us to really focus on making our exports competitive again, helping exporters to export more, ease some of the constraints that they're facing, not introducing new constraints, new regulations, which we've seen happen over the last few months, because that will ultimately be what helps our reserves, what helps our balance of payments, what cushions us against adverse exchange rate movements.
Well, throughout the year, there were a lot of rifts between whether we should lean towards China or whether we should lean towards the United States, which is a superpower. But what do you think the government should really do? Should we have a friends of all, enemies of none type of foreign policy, or should we just really customize our economic policy towards just one country?
So looking at it from an economist's perspective, because I'm sure folks in international relations, security, diplomacy will have a different view. I think it's ideal to have a policy where we look to everybody. And I think even for business, for foreign investment, that should be our strategy, look to everybody. But if we were to just set aside the specific countries and look at more what should we be looking for, I think we should be looking for value for money. Which country, which investor from which country can come in with the best deal for the country on a particular project, whether it's the port or the airport or a shipping terminal or a highway project. We, as an economist, I would be very disappointed if we end up giving some of these projects based on political or diplomatic considerations, rather than value for money, because we have a fantastic opportunity right now. Sri Lanka is safe and secure, unlike many other parts and countries of the world. We are looked at attractively after the transition last year. A lot of investors are keen to come to Sri Lanka. So why would we want to jeopardize that opportunity without, opening it up to anyone who's willing to come in with the best deal on the right terms, with the right transparency? So I think we need to shift away from should it be US, should it be China, to say it should be the best investor for this project, and whichever country that is. It could be the Chinese. I mean, the Chinese have some phenomenal projects around the world, and for some parts of investment, they'll be great. And for other parts, it'll be the US, it'll be Germany, it'll be Norway, it'll be Australia. So I think that's how we need to shift. But you're right, there's this big debate going on right now, and I think we should look to everybody, open arms, and say, who is willing to bring in the best deal for the country that creates jobs, that helps exports, that makes us competitive, and then competitively, transparently give it to those folks.
Well, Sri Lanka and the free trade, the free market, so to speak, we're struggling. We opened up before everyone in the region, even India, but right now Sri Lanka is struggling to keep up with all the other countries and be on par with it. How do you think we are going to tackle this issue?
So I think what you said about Sri Lanka being one of the first in the region, absolutely right. In 1977, we were one of the first countries to open up the economy. Something unfortunate happened shortly after that, which didn't help us take full advantage of that liberalization. That was 1983 and the war that followed. In fact, in the early 1980s, just before the troubles began, we had top investors in electronics like Motorola and others that were willing to come and set up in Sri Lanka. And they would have created thousands of jobs and billions of dollars of exports. We would be having a very different conversation about whether opening up worked or not if those investors had come in, because it would have definitely been a huge boost. They left. They never came back, and they went to places like Penang in Malaysia and Thailand. Now we have the opportunity, once again, to attract some of those investors and really make being an open economy work for us. But I don't think we are a free market economy anymore. There are a lot of considerations on the social side, which I think is good. There's no truly free market anymore, even in the US, for which everyone holds up as the flag bearer of free markets. There's no such thing anymore. I think now we need to get sensible about balancing social welfare, helping vulnerable communities and segments of society, with being a truly liberalized, competitive economy on the other side. I don't think those two are incompatible. You do one and create jobs inclusively, it will help the other.
Well, creating jobs, the EDCA came under a lot of fire recently, and how exactly this is going to pave the way for Sri Lankan jobs and the Sri Lankan job market itself. How do you think that we are going to go ahead with this plan, and will there be a lot of protest, opposition from the Sri Lankan professionals?
So I think we've already seen that there's been some opposition from professionals. I think their opposition really is to one part of an agreement like this, which is called Movement of Independent Professionals. From what we are told from the government, this is not going to be part of the EDCA agreement. It's not going to be included, but everything else on the services side will be. So I think that is something the professional groups who have been protesting need to understand, that the government has said this. But I think overall, the EDCA is a great framework for Sri Lanka to expand our economic relationship with India, because we have to understand that India is such a big market, so close to our shores, particularly South India, growing so fast, a lot of opportunities for business linkages, a lot of opportunities for Sri Lankan companies to sell to the Indian middle class. India's middle class is going to be 200 million by the end of this year. That's 10 times the size of our domestic market. If you slice off just even 1% of that, there's an opportunity. But I think some of the other concerns around that, apart from the professionals, is can the agreement work for business? There have been problems with the FTA in the past. I really hope that those get fixed. Otherwise, we're missing out on the opportunity.
So does that mean that Sri Lanka will become just a mere pilot program for the Indian market itself, where they will just try out things, and if it doesn't work out, they will take it back, and they will maybe sell different, let's say, mobile phones or anything else, goods? Will we become a pilot program during this?
I think we have to be realistic. For most Indian companies and Indian brands, Sri Lanka is a drop in the ocean. For them, the real deal, the real action for them is at home in the Indian market. I think it will be more of a pilot for Sri Lanka, where Sri Lankan businesses try and dip their toes in the water of this big Indian market, start with South India, start with one state, start with one business partner. I think that is where it's going to be in reverse. And who else will it be a pilot for, or a playground? It'll be for foreign investors who find it difficult to enter India directly, for foreign investors who feel, oh, India is too big, we can't understand the dynamics, and say instead, okay, let's start with Sri Lanka. Let's locate in Sri Lanka to play in India using the FTA or using the ETCA. And this is not just imagination, it's already happening. We meet investors on a monthly basis, and they tell us the same thing. They say, Sri Lanka, we can understand the market, it's a little easier to navigate, and it's a great springboard for us into India, into South Asia. And so we can attract that kind of investment to come here to play in the region.
Well, you're watching Biz1st in Focus, and when we come back, we'll talk about the Trump triumph and how exactly that has affected us Sri Lankans and the Sri Lankan market. Stay tuned. Welcome back. You are watching Biz1st in Focus, and I'm in conversation with the Chief Economist of the Ceylon Chamber of Commerce, Anushka Vijayasinghe. Well, the Trump triumph, it just took the world by storm. He became the Person of the Year for Times magazine, and that itself speaks volumes of what a big impact his appointment as the next President of the United States has made. Well, they orchestrated the free market. They became the designers of it. But are they going to be the same in the future? Are they going to play the same role in the future? And how exactly is that going to affect us, the Sri Lankan market, and our exports?
Excellent question, Stephanie, because there's so many unknowns right now. I think with Trump coming in, the paradigm has completely changed. So if anyone was to say it's going to happen in this way and not another, I think we're kidding ourselves. So I'm not going to offer that kind of a forecast. But what is interesting is there's almost a split personality of the US that's emerging, particularly after Trump. So you have a proclaimed free market economy where you have a lot of former current top corporate leaders, Wall Street folks, oil tycoons in the cabinet. So I'm sure they would want to adhere to those traditional American free market principles of lower taxes, smaller government spending, open to trade, etc. But at the same time, we heard a lot of rhetoric from Trump about closing off to imports, slapping penalties on China, naming and shaming companies that are quote-unquote shipping jobs overseas, or investing overseas instead of in the US. Now those are not free market at all, and those are not open policies at all. So that's really interesting. On the other hand, he's also talking about spending a lot of money on infrastructure. Now that is also that's contrary to the earlier beliefs of smaller government spending and so on. So I think we're seeing a very different a US economic ideology emerge. For Sri Lanka, I think where we really need to watch are probably on two main areas on the economic front. One is, what does the US do with China? If Trump goes at loggerheads with China and it sparks a trade war, that hurts everybody, and particularly countries like Sri Lanka, who are smaller players in global trade. If they start, slapping tariffs on each other, if, global trade slows down even further, and it's slowing down now, I think that would be a disaster for everyone, and no less Sri Lanka. The other thing to watch is what will be the impact of, if Trump goes ahead with the spending spree, particularly on infrastructure, then US rates are going to have to adjust, which will have a global impact on international capital markets, and Sri Lanka's ability, and Sri Lanka's borrowing overseas also will have an impact on that. So for the moment, those are, I think, the big areas that I think we need to watch on the Trump presidency. But then again, like I said, it's a whole new paradigm. We have no idea what it's going to look like 6 months or a year from now. And I think because of that, we should really focus on our home front, making sure that whatever happens there, whatever happens in China, whatever happens with Brexit, we are a resilient economy, and we are prepared to take on the global economy, and our exporters and our businesses are clever and competent enough to weather whatever storm, and our macroeconomy will support that and is resilient also.
Well, that literally gave us a sneak peek into what's ahead of us in the year 2017, a brand new year. Thank you very much for joining us, Anushka Vijay-Singh.
Good to be here.
Well, that was the Chief Economist of the Ceylon Chamber of Commerce. Thank you very much for joining us. Well, this was a quick review of what happened in the year 2016. If you want to know more, you can log on to our website, www.Newsfirst.lk. I'm Stephanie Lazarus, wishing you a very happy new year and hope you have a peaceful 2017. Signing off. Good night.